In a surprising turn of events, the US stock market experienced a significant rally, driven primarily by the performance of megacap companies. These giants, often seen as the backbone of the market, have propelled the Nasdaq index to climb higher, showcasing the strength and optimism in the technology sector. This rally is not just a short-term spike, it signifies a robust confidence among investors who are eagerly backing these large tech firms. Welcome back to Stock Whispers, your gateway to investment brilliance. Are you ready for a roller coaster ride through the world of finance, where fortunes can soar as high as a Bitcoin rocket or take a dive like a rock star after a wild night? Today, we're talking about a rally in the US stock market that's got investors buzzing and the Nasdaq jumping for joy. Ready? Let's dive in. The US stock market really got off to a flying start this week, reminding everyone of the energy and buzz that hits when a catchy summer tune plays for the first time. The big players on Wall Street, including the Dow Jones Industrial Average, S&P 500, and Nasdaq Composite, all decided to take a leap upwards. This surge was mainly powered by some of the largest companies out there, particularly those in the technology sector. It was a scene straight out of an inspiring underdog movie where the least expected contender starts leading the race, except this drama was playing out in the financial markets with stocks and indices as the main stars. The anticipation around the Federal Reserve's upcoming meeting is creating a lot of buzz, similar to the suspenseful wait for the final episode of a TV show's season. Everyone is glued to their seats, wondering what will happen next. The betting odds are leaning towards the Fed keeping interest rates steady, a move that wouldn't be too surprising given the recent hints dropped by the latest inflation data. It suggested that perhaps the Federal Reserve might press the pause button on rate changes, opting to watch how things unfold a little longer. This scenario has investors on the edge as they speculate and make their moves based on what they believe will be the Fed's next big decision. Meanwhile, in the tech world, a piece of thrilling news has set the scene abuzz. Alphabet, Google's parent company, saw its stock price soar on the back of rumors about a potential groundbreaking collaboration with Apple. The talk of the town is that Apple might integrate Google's cutting-edge Gemini AI technology into its iPhones, marking a significant partnership between two tech behemoths. This kind of collaboration is reminiscent of when two A-list celebrities announced they're teaming up for a blockbuster movie. It's unexpected, exciting, and has everyone talking. For Alphabet and Apple, such a partnership could open new doors and set new standards in technology and innovation. For investors, tech enthusiasts, and consumers alike, this hints at a future filled with advanced AI capabilities right at their fingertips, making everyday technology even more integrated into their lives. This news not only spices up the stock market narrative, but also promises an intriguing next chapter in the evolution of smart technology. Moreover, the world of commodities has been nothing short of a blockbuster, with oil prices taking the spotlight. Both Brent Crude and West Texas Intermediate, the big stars of the oil sector, have been on a roller coaster ride. Thanks to a mix of increased tensions and attacks in places where oil is a big deal, prices have gone up. It's as if we're watching a high-stakes geopolitical drama, except this show plays out in the global market, and the currency is very, very real. But wait, there's another twist. Gold, that shiny, ever-so-precious metal, has made quite the entrance after a slight stumble. Just when you thought it might be down for the count, gold proves it's still a heavyweight in the world of investments. Picture gold as the financial world's own phoenix, capable of rising from its ashes to dazzle and thrive once again. It's a classic comeback story, reminding us all why gold has been treasured by civilizations for millennia. My analysis? With the market's pulse quickening, it's crucial to look beyond the numbers. The Fed's upcoming decision on interest rates could be a pivotal moment for investors, especially against the backdrop of inflation concerns. Keeping a steady hand on the economic tiller means balancing growth with stability, a task the Fed has navigated with varying degrees of success over the years. The surge in tech stocks, particularly with Alphabet's leap, underscores the growing importance of AI and big tech in our lives and the market. These developments are not just points on a graph. They're indicators of broader technological and economic trends that savvy investors should watch closely. So what does this all mean for you, the individual investor? Don't worry, I got you. Let's break down how you can be smart with your money in these happenings, making it super simple and a bit fun too. Imagine the stock market is like a giant store, where instead of buying things like video games or sneakers, you buy tiny pieces of companies. Now, how do you make sure you don't end up wasting your money, but instead maybe even make some more? Here are some tips. 1. Keep up with news. It's like checking the weather before you go out. You want to know if it's going to rain or be sunny. For the stock market, keeping an eye on news helps you understand what's happening, so you can make smarter choices. 2. Don't put all your eggs in one basket. Just like you wouldn't want to spend all your money on just one video game or toy, don't spend all your money buying pieces of just one company. Spread it out over different kinds of companies or investments, so if one doesn't do well, you're not losing all your money. 3. Think about the future. Investing is more like planting a tree than buying a snack. You do it for the future. The tree takes time to grow, just like your money in the stock market. So, think long-term, not just about what you want right now. 4. Know your adventure level. Some people love roller coasters and some prefer the merry-go-round. When investing, some people are okay with the chance they might lose money for the possibility of making more, while others not so much. Know what you're okay with before you decide where to put your money. 5. Stay chill. The stock market goes up and down, kind of like a yo-yo. Don't freak out and make hasty decisions when it happens. Stay cool and stick to your plan. 6. Learn from oops moments. Everyone makes mistakes, even when buying and selling in the stock market. The important thing is to learn from them, so you don't do it again. It's like learning not to touch a hot stove twice. 7. Ask for help if you need it. If you're not sure what to do, it's okay to ask someone who knows more about it. It's like asking for directions when you're lost. A financial advisor can help guide you in the right direction. So think of managing your investments like a fun game, where you're learning and getting better as you go. Keep these tips in mind, and you'll be on your way to being a savvy investor. As we wrap up today's market roundup, remember that the world of stocks is ever-changing, filled with both challenges and opportunities. Today's rally and the movements in the energy and tech sectors offer valuable lessons in the importance of staying informed, diversified, and focused on the long term. Thanks for tuning into Stock Whispers. If you enjoyed this video, give us a thumbs up, subscribe, and hit that notification bell so you never miss out on our expert investing advice. Until next time, keep listening to those whispers and let them guide you to your next big win. See you soon.